Hey everyone, welcome back to Corporate Decoder, where we break down complex financial reports so you don't have to. Get ready, because this company's latest filing is a wild ride of name changes, acquisitions, and some really interesting financial moves. Today we're diving into the Form 10Q for FYNtechnical. Innovations Inc., formerly known as SMC Entertainment Inc. They're reporting for the quarter ending June 30, 2025, and there's a lot to unpack. First off, they're a smaller reporting company, which means they have fewer disclosure requirements, but that doesn't mean we can't find the juicy bits. Let's jump straight into the moneymakers, the consolidated balance sheets. As of June 30, 2025, their total assets are $150,777 yuan. 2024, where it was just $75,855. That's a nearly 100% increase in assets in just 6 months. A big driver here is intangible assets, which jumped from $64,194 to $146,649. This often happens when companies acquire other businesses, and we'll see that's exactly the case here. On the liabilities side, convertible notes are a significant item. These notes, after accounting for discounts, more than doubled from $688. This suggests they're pricing capital by borrowing money that can be converted into stock N29 to 1,488. This suggests they're raising capital by borrowing money that can be converted into stock. Now for the income statement. For the 3 months ending June 30, 2025, they reported revenue of $24,499. It's a small number, but it's their first reported revenue, likely from their acquisition of Bateau Asset Management. However, despite this new revenue, they reported a net loss of $653,755 for the quarter. That's a big change from the massive net loss of $14,006 period last year, so an improvement, but still a loss. Looking at the weighted average shares outstanding, the diluted number for the 6 months ended June 30, 2025, spiked to over 8 billion shares. This massive increase in potential shares is often due to the conversion of convertible debt or preferred stock. It's a critical number because it can significantly dilute the value of existing common stock. The statement of changes in stockholders' deficit shows how equity is moving. A striking entry here is the increase in common stock issued for conversion of debt and accrued interest. For the 6 months ending June 30, 2025, they issued $2,059 in June 2025. This is a clear sign they are using stock rather than cash to manage their debt obligations. Their accumulated deficit, which is the total net losses over time, is still a hefty $19,009 as of June 30, 2025. While it did decrease from the previous period, it highlights the company's historical struggle to achieve profitability. Let's look at cash flows. For the 6 months ending June 30, 2025, they used $235,889 in cash from operations. This means their core business activities are burning cash, which is common for growing companies, but still a point of concern. Interestingly, they had $11,925 in cash provided by investing activities, specifically from acquiring the Bateau business. This is a small amount, but it shows the active steps they are taking to grow through acquisition. Now for a really interesting item in the other income expenses section. For the 6 months ending June 30, 2025, the company reported a substantial gain of $8,360 on the extinguishment of debt. This means they managed to get rid of debt for less than they owed, likely due to negotiations or a favorable settlement. In contrast, for the same period last year, they had a massive transaction expense of $7,970,400. This kind of expense often relates to mergers, acquisitions, or major corporate restructuring events, and it hit them hard in 2024. The company's history section reveals some significant changes. They were incorporated in 1998 as Professional Recovery Systems Limited and later changed their name to SMC Entertainment Inc. And most recently on July 25, 2025, they became FYNtechnical Innovations Inc. This kind of name evolution can often signal a shift in business strategy or focus. A key event was their acquisition of FYNtechnical Global Equities EBT Inc. on April 21, 2023 for shares of Series B preferred stock. FYNtechnical is involved in AI-driven investing and wealth management technology. Then, just recently on January 7, 2025, they acquired Bateau Asset Management Limited, an Australian investment manager. This acquisition is likely the source of their new revenue stream. The balance sheet shows a derivative liability which decreased from 124 to 74,000 at the end of 2024 to 74,044 to one head to 60s 2025. The notes also detail the valuation during the period 6 Fs to 0.0019 during the period. Under related party transactions, we see convertible notes issued to key personnel like Eric Blum and Ronald Hughes for accrued compensation. These notes, which are non-interest bearing, are convertible into common stock at very low prices like $0.06 per share for Mr. Hughes. This is a common way for companies with limited cash to compensate executives. Turning to acquisitions, the company had a complicated deal with ChainTrade Ltd. They purchased assets for an $8 million promissory note, which was convertible into stock. However, this deal seems to have fallen apart as they filed a lawsuit and the agreement was unwound due to lack of consideration. The good news for FYNtechnical Innovations is that they managed to get out of this deal and record a significant gain on extinguishment of debt. It's a bit of a messy situation, but it looks like they came out ahead by avoiding a bad deal. The acquisition of Bateau Asset Management in January 2025 seems much more straightforward. They acquired 100% of Bateau for Series C preferred stock and convertible notes. The provisional purchase price allocation shows intangible assets like customer relationships valued at $90.76. Now, a critical point of concern is that the filing notes state all notes past their maturity date are considered to be in default. This is a serious red flag for financial stability. Under controls and procedures, the company acknowledges their disclosure controls and procedures were not effective. They mentioned their principal executive officer and principal financial officer concluded that information required to be disclosed wasn't being processed in a timely manner. This is somewhat concerning as it suggests potential issues with how they manage and report their financial information. Finally, the certifications from the CEO and CFO are included. These are standard in these filings and attest to the accuracy of the reported information. So what's the story here? FYNtechnical Innovations is clearly in a transition phase. They've changed their name, acquired new businesses, and are actively managing their debt through equity issuance. The good news is they're generating some revenue and managed to turn a problematic acquisition like ChainTrade into a gain. However, the recurring losses, the significant accumulated deficit, the use of cash in operations, and the mention of notes in default are serious concerns that investors need to watch closely. Their ability to secure future financing and convert their new ventures into profitable operations will be key to their survival and growth. It's a high risk, potentially high reward situation, typical of many smaller reporting companies in the tech and finance space. That's our deep dive into the latest filing for FYNtechnical Innovations. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.